Good evening, everybody. Corey here. This will be the very first video going over distributions and estimates based on the trades and everything since I've been doing this. I started this about a month and a half ago. This will be the first time that I've had a full month of looking at all the trades for every day and compiling that data. Of course, the original workbook I started with, I had worked on building that for probably about a month before I ever did videos or anything else on it. So the reason I ask a bunch of questions, when I do videos and stuff, because a lot of this stuff I am building, right? I'm in the middle of building it. So we're building the plane in flight. Unlike when I'm at work, I'll work with stuff and I'll build and adjust and I'll do all kinds of stuff before anybody ever sees it. So it's a little bit more difficult when I'm having to, I need to build something today or tomorrow and then show everybody. So just please go with the flow. This is what I've made as of today. Yeah, I do not like, honestly, I do not like the colors. I've probably spent more time trying to format this and pick colors and do all this stuff than I did actually building the data. I've spent too much time on it. But you've seen something like this. Um, oh, shoot. Of course. I was just going to show you. Well, maybe it won't. It won't move. Oh, there it goes. So, we saw something you saw something similar to this weekend when we did the weekly roundup right here. And then last night I showed y'all that I had something like this. But of course, and we briefly just went over this just to give you an idea. And then, of course, we've talked about grouping all the data together to have one YieldMax ETF. You could see all the data versus here we had to keep scrolling and scrolling, to see all the data. Unlike originally when I started doing the weekly roundup, it was more of something like this with the trades and additional data at the bottom. But so I've started rebuilding, what we were talking about, or some of us. But at this point, all this is just the distribution stuff to do with distribution, right? Because we are having the ex dividend date is April 4th. So we have 4 more trading days. So we have Thursday and Monday, Tuesday. We should have the declaration date on Wednesday, and then the ex dividend date is Thursday. So we have 4 days before the ex dividend date. Let me make sure. Yep, declaration date the 3rd, which is Wednesday, ex dividend date the 4th, and then the pay date is the 8th. So, what I've decided to do is I'm going to cover this every day, up until, and then we'll get the declaration, right? Then that way you can sort of follow how things are progressing by each ETF. But again, this is like the very first initial build. It may morph into other things, and then as you provide feedback and suggestions, we can make changes as well. But in case you haven't seen this data in the other videos, we're going to go over this a little bit. So the line 1 obviously is going to be all of our tickers. We're going to have, let's see. So as you see here, we have the YieldMax ticker, and then we'll have the underline. So this row right here is going to have the outstanding shares, and these are as of end of day today. And then the next one is going to be the current stock price for the ticker above it. So in this case, AIYY is 14.85 and AI is 27.26. Okay, then we're going to go into the section that we're going to use to, I'm not going to really say get an estimate, but to give us some data to work with, right? Because we don't know exactly how it's calculated. I know Jay has said several things. There's things within the prospectus and everything else. And then there's things probably outside of those, different factors, that we're not going to know about, because that's insider information, right, to Zega Financial and everything. So all I can do is gather the data, and that's really what I do here on this channel. Is I try to gather all the data and provide it to you. And most of the times I don't provide my personal opinion, because my personal opinion, it doesn't really matter, right? Because what I do is not financial advice, because I'm not a financial advisor. And so a reminder that this is for entertainment purposes only. But what I do is, I pull together all the data that I can get from the YieldMax website, or other sites, depending on what we're looking for, right? And I pull it all together, and then I try to present it to you. I present the data to you, and then you can be more educated on, what's going out. You see the ins and outs and everything else, but then you can make a decision for yourself. And I know I'm talking a lot, and I always do, but just up front, again, don't run. Just like, Retire on Dividends tells you, and Max tell y'all that, just because we're showing amount on here does not mean that's going to be it, or that it will even be close to that. So please understand that. So anyway, so we'll go to the next line. So line number 5 is easy, right? That's the previous distribution. So this would have been the distribution from last month, $1.06. Of course, this is rounded. With at that time was at 86% yield. The next line here, we have a 30-day implied volatility. So I've had IV on everything. Just know that all the IVs that I have in all my workbooks are all going to be 30 days. So in this case, and so Jay has stated that you could use the IV as a base for the distribution. And I really hope I don't say this wrong, because I really try my best not to give out inaccurate information. Man, I should have wrote it up in front of me just to make sure. But if I recall correctly, the way they determine the amount of premium that they want to get every week, the money that they want to earn on selling calls, is based on the IV, right? So that's why he says that you could use the IV as a base. However, understand here, this is the IV now, today, the last data pulled. It's not, I haven't done it yet. I could have, but I haven't. It's not, adding together the last 3 or 4 weeks, or going back and looking at each week's IV to determine. It's not doing any of that. It's just saying, just based on today's IV, if we did a distribution amount based off of that, then it's telling us here it would be 65 cents. Okay? And I know I'm doing a lot of explaining up front, but I need to make sure everybody understands this first with an example, and then we can go through this. But then the next line, so again, previous distribution, implied volatility only. And then we go into the short call premium earned. So this is when they sell that call that week based on the IV for that week. This is the money that they have earned, the premium they have brought in to the fund. So when we look at the trades, right, it's those plus amounts when they do the sale. And then the next one is going to be all short call trades. So it will be the premium that they brought in, and then it will be minus however much it cost them to close those out when they did the buy to close at the end. So again, none of us know 100% sure, and there's other factors, right, that could be involved here. It could have been, they may want to adjust something based on previous distributions or future whatever, or trying to keep things somewhat the same amount of percentages that it normally is. There's all kinds of things here, but all we're going to deal with is some of this data collected, and then, look at that and make our own decision. Educated guess, if I don't even know if you could call it an educated guess, but a guess, a guesstimate, until you actually get the amount. So, so as you can see here, if we did it based on IV, it would be 65 cents. If we did it based on today's IV, 30-day IV. And then if we did it on the short call premium earned, we would get about, the estimate would be 63 cents. If we did it based on all of the short call trades, all the positives and negatives, the net amount would be 61 cents. Now, and then of course, then there's the yields, right? So obviously this first one is the last yield for the distribution, the 86 cents. The 52 percent for the implied volatility, obviously that's the IV. And then the 51 and 49 would be yields. So all of these are yields except for the implied volatility. And I guess what I could do, I could put in those blocks. I have it in the header here on row 4, but if you think it would be more to help clarify, I could make it say yield or IV inside the block with the numbers or with the percentages. But just let me know if you feel that I should do that to make it easier to understand. So that's the data that we're starting with. And then, of course, number 5 is informational purposes, but it could be relevant if you're trying to guess, right? And then the next 3 is the data obtained. And then we go to line 10. Now this is the estimated distribution range. Now this range, and it's the ones in these 2 blocks, and I guess I could put that up here. I could put distribution range here, and I could put estimated, but that's only for this one, unless I put another line in between the others. I don't know. You can let me know what y'all think, if it's okay or not. But this is the range, and the way I've based the range, sorry, I hate how everything pops up like it does. But the way I did the range was based off of these 3 factors: the IV, the premium earned, and the all the short call trades, right? And I know it. I promise you, if you look at this one, you're like, "Well, that doesn't make sense." I mean, it's pretty easy by looking at this one. Well, it's not so easy when we look at the other ones. So it's an estimated range based on these 3. And then I did one, then I was like, okay, well, what if we just took the average of them? So then that's what the next line is. It's just a pure average of those 3 numbers. And then this is the percentage, like the percentage yield, just like these, based on this average. Then I was thinking, then I put another line there and I just put adjustment question mark, because I'm thinking what I'll do, if that would be sort of my guesstimate, I guess, once we get a little bit closer and looking at the numbers, especially when some of these have wide, spreads or whatever else, then maybe I should say, well, these are good numbers and all, but I think this is probably more accurate. And again, this is just all guessing. So then the bottom, we have the difference from the previous to the average. And I might change that average later. I don't know. That's just what I used for now, because the estimated range doesn't help me. So what I've done here is just taken the average, which is 63 cents, and then of course subtracted the previous distribution of $1.06, and it just shows as of right this second, and we still have, like I said, we have 4 days left, but this is showing that we are currently 43 cents below the last distribution. But honestly, with only 4 days left, meaning we've completed over 70 something percent of the days, that I'm going to guess that we're going to be underneath, the previous distribution. And then the next column, the negative 35%, that's just showing, that would be the difference in, the 51% average yield minus the previous distribution yield. So I hope that sort of, you understand all of that. And I'm sorry, I know this is going to be a long video, but we are talking about, we are talking about 19 different tickers. I am so sorry. So I just thought of something. So I need to look at something real quick just to make sure. All right. Sorry about that. I needed to look at something just to verify a formula, and then I forgot everything's built on a different spreadsheet and it's referencing that sheet because I had already built this right on the one that you saw this weekend and the one I think I showed you last night or the night before. So I just wanted to make sure that these were based on the specific dates that we needed, and it is. It's just been a minute since I actually built the formula, since I had built them Sunday for the weekly roundup. But anyway, so this is what we have here. And honestly, I'm looking at this, right? So if we were looking at this and trying to analyze it, like this is everybody's guess at this point. We've got the data, here it is. What's your guess? What do you think? So as of today, we're looking at, 63 cents average, but we have 4 days left. I'm not going to do it while we're live, and I haven't done it before now, but then maybe after tomorrow, I can go in here and just sort of give an estimate for now until, next week, and then I could just follow up every day and we can see where we're actually at, and if our estimates may or may not be adjusted. But anyway, right here, 63 cents looks good, but then you probably have to add a little bit more for whatever they're going to earn next week. But we can continue to track this every day. And I know this was requested of me. Actually, a lot of this has been requested of me, but I've sort of dragged my feet because I needed to get the data, build stuff, and everything else being our first time around. Okay, so now that we've probably spent 30 minutes going over the first one, we're going to continue going, and I'm going to apologize because this will be a very long video because this is the first one. We needed to totally explain this up front, and we have 19 ETFs to go through, so it's not just one. So please bear with me. Okay, so now we're going to go to AMDY. So you see the prices up there for AMDY, AMD, the amount of shares. We have over 5 million. The previous distribution here was $1.36 with the 81% yield. If we're looking at the 30-day implied volatility, it's looking like, an average would be a 77 cent distribution. But if we look at how much premium we've earned so far, we're looking at 65 cents, and then the all short call trades is 63 cents. And now I need to add something I forgot to say before. That remember, these calculations are based on the outstanding shares as of today. As people, watch these estimates and start looking, and, some people like to buy the day of or even the day before, whatever, the declaration date and the X date, so they can get paid out the distribution. So basically, they can get their money back, because and if you don't know, because you may not, but the stock is going to drop the amount of the distribution the next day, right? So if the stock's $20 and they pay out a distribution of $1, then the next morning when it opens up at 4:00 a.m., for pre-market, it's going to be $19. I know I've seen some posts about people complaining that they bought in and then the next day it dropped, the amount of the dividend. So I just hope that, y'all understand that too. And then, of course, if you're in a taxable account, and this is not financial advice, but if you're in a taxable account, if you buy in on the distribution date, the day before the ex-dividend date, and you buy in on the declaration date so you can get that payment, your basic, you understand you're going from 20, you're going to go down to 19, and days later they're going to give that dollar back to you, but now you're having to pay taxes on that. So just understand that. Of course, I also understand that some people can trade in their IRAs or Roth account or whatever, so you don't have to pay taxes. Of course, then you may have to wait a few days before you get that money back to be able to reinvest that somewhere else. I know most of the time, depending on the market, I personally buy on the ex dividend date, you know, usually, near the 4 or 5 o'clock in the morning. And so I can get my lower cost basis, and now I'm not having to pay taxes on the distributions by buying in the night before. But that's just me. Everybody, has their own way of doing things. So, anyway, so I guess, sorry, my whole point getting to this, and I know some of you that already know this is boring and you wish I would just shut up, and I'm so sorry, but some people don't. Um, so with those people that are buying in these shares, and I could go back actually in another next time if you want. I could build up and show you historically where we've looked at on shares, at least last month, where people were buying in and around ex dividend date. But what I'm saying is, like, right now we have outstanding shares of 5 million. Next week before ex dividend date, this could be 6 million, which means the distribution is going to be lower. So just understand that also. All of this is moving, right? The price amount that will change, the outstanding shares will change, or premium will change. So, I mean, now that we're in the last few days, it will be more accurate than if we were in the first week. But, things change. So just please understand all of that, and just, you know, make a plan, and just, I don't know what else to say, but just be cautious, please. And do not take any of this that's here for like 100% accurate data, and nothing will change. And I say that because I know sometimes that they will post trades to the sites, which is the data I pull down, and there could be errors in that data, and they may not correct that until the next morning, but we never see those corrections. So there's sometimes there's some issues like that too. So keep that in mind. But as the outstanding shares increase, that distribution is going to go down, since it's based on the number of outstanding shares that they have to pay on. All right. I'm sorry. So we got through looking at those, and we look at the estimated distribution range here. So on this one, we're anywhere from 63 to 77 cents. So we would be looking at if we looked at the average of those numbers, if you remember the average of these right here, then we're looking at 68 cents. So that would be about a 40% distribution. Of course, that's half of what it was last month. So what will they bring in? They might buy some, they might sell some calls tomorrow. On these single stocks, usually what they'll do on the Thursday and Friday, which there were lots of trades today. So once I'm done with this probably hour-long video, I still have to go do the Ulti tradings and holdings, trades and holdings, and then I'll have to do the regular YieldMax, these, right, the trades and holdings, and I know there are a lot of trades today, because today's like a regular Thursday, right, and then tomorrow's like a Friday, because there's a holiday this Friday. So what they'll be doing is they'll be rolling a bunch of calls, and then probably buying into some, and they could be selling some, but I know there's a lot of trades for today specifically. So they may, and then I don't know about, well, then they should earn, premiums the next few days, and the next week, I don't know. They could, it's one of these things too. They could next week and be like, oh, the distribution isn't about where they want it to be yield wise and stuff. And they may, you never know. They may sell, some more things, or move some stuff around. I don't know. I don't know how they do all that, and I'm not going to pretend that I do. So know that up front. But anyway, so if we look at this one, we already see it. We're talking about down here at the bottom. We said something about a 50% change. Of course, here I had the actual changes. And this is just based on today with 4 days left. So let's move on. And hopefully I didn't forget anything else so we can get through this. I appreciate you hanging in there with me. Okay, so we have AMZ. Previous distribution was 64 cents. The implied volatility as of today shows an estimate of 66 cents. The premium they've earned per share is 44 cents. And then on all of their short call trades, they have brought in 39 cents. So we have a range of 39 to 66 cents. If we did an average of those three, we're looking at, about 50 cents, which is 25%, which isn't bad if you look at, knowing that we have 4 days left. I feel like I need to put on a counter on here somewhere that says 4 days. Maybe that's what I should put up here instead of saying YieldMax here. I don't even know why I did that. It just needed to say something. I couldn't leave it blank, right? I think they use T minus versus D minus for day. And where did it go? Well, it's showing up over here on my computer. I don't know why it's not showing up there. I don't know. This thing is crazy sometimes, but it's typed in there. I guess we'll see it maybe, I don't know, when it decides it wants to show up. Well, in fact, my entire column is gone. All of the data is gone, so that's awesome. There we go. Whew. Sometimes this Google Sheets. All right. So we were on AMZ, and then I was trying to do this. So it didn't like. All right, whatever. I was trying to put T minus 4. All right, so where were we at here? We went through everything, and then I was saying we're about 15 cents down. Thinking about something maybe I should put on here. Let me type that real quick. I might add something to here. All right. So I wrote down another thing that I was just thinking I could put on here to help us. And then as I was doing that, I thought of another thing. And I know it's a lot, right? But this is my first month, and we don't want, if I can, get all the possibilities now, or at least most of the possibilities of things and ways to look at things now, it'll help us next time. If I just do like one thing this time, and then the next time I'll be like, oh, well, let me try this one instead, then it'll take us forever to get to some kind of, a better way of calculating. So I am trying to, everything that I can think of to get us there. We try it now. And then what we'll do is then when we get, we'll have all this data, right? And then when we get the actuals, then we'll get that and we'll compare, and we'll be able to compare all 19 to each other to see, maybe which way might have been best, or if any of them were even, you know what I'm saying? So anyway, I know. I know the data people out there, the people that like to see the numbers and data love me right now. And the other people that don't hate me. So I'll just say I'm sorry. But we will move on. So we go to Aptly here. 42 cents last time, if I remember correctly, that was up. But it was a 29% yield. If we look at implied volatility, it's only 29 cents. And if we look at that premium earned, it says 88 cents. And then if we look at the all short call trades, that's 84 cents. So if I remember correctly, that was a big one for Apple last time. And looking at these two, that tells me, I would expect an even bigger payout this time, which I can understand. Apple has been volatile based on all its issues and getting sued and this and that and whatever. So yeah, there's a possibility that it's been, earning more, even though the IV says it's still only 20. The 30-day, well, it is 30 days, and this stuff's been happening maybe the last week or two, really. But then, see, and this is where we come down to question if you're earning, you know, you know what, 100, 200% more, because I can't remember what the previous distributions are. The question will be, will they pay that out 100%? Or will, and by the way, all this stuff is based on 100%. I don't do it 90% or anything like that. So you can take that into account as well. Which then, now I forgot my point. Okay, I know what I was saying now is that, would they hold some of this back because of something that's happened previously in previous distributions? There's also the possibility that maybe they want to be somewhat around the same percentage every month, and so then they might want to lessen this one if they didn't, need to cover some past distributions or something where they may have paid out more, you know, to try to keep up the percentage to be around the same. Maybe they want to hold some of it back for future where they think it might be lower. We never know. So those are other things that we can't really factor in because we have no clue. So anyway, so those are really high. I mean, compared historically, knowing Apple. In fact, looking at this, I'm not saying for y'all to do this, but I don't know. That would be an interesting buy. I think I've actually been buying on it in the dips the past month personally, but I'd have to go back and look. But anyway, so we have the estimated distribution range here is 29 to 88%. I mean 88%. 29 to 88 cents. Now, if we looked at average, it's 67 cents. But honestly, if like that's why I have the adjustment line. If I was just looking at this, I wouldn't use. I think I would stick with maybe an average of the 88 and 84 cents. So if I was just doing that, then I would say, okay, I'm thinking more like 86 cents. And that's assuming they're not going to hold any back. They're not going to do 90%. They don't have to cover something in the past or try to cover something in the future. And just be like, okay, 86 cents. Of course, and then of course that doesn't account for 4 more days. But that's really high. But in this case, I would discount that 29 cents because all that was based on the IV. But I don't know. You never know. But, well, that's a lie. We will know. We will know on Declaration Day when we can compare that data with this data. And then you have at the bottom that this one actually is showing, obviously more than what it paid out last month. This would be 25 cents if we look just at the average. So we're going to move on to Coney. So here's another situation. So here we have previous distribution of $1.66, implied volatility, estimated distribution. I guess I should put estimated or something here. I didn't want that to be all caps. There we go. I don't know why I did all caps. So based off the IV, be $2.10. Based off the premium they received, which is what I lean more towards because that's the way I take it, would be $1.91. If we looked at the net of all the trades for the short calls, it's negative 53 cents. So we know they're not going to pay negative 53. They're not going to pay 0 cents. So that's why I'm thinking it's more towards the premium earned. So what I've done here, so if you look at the estimated range down here at the bottom, it doesn't say negative 53. What it's doing is it's looking for anything that's above, that's a positive number above 0. And then that's doing the range. So now in this case, it's doing the range, which there's only 2 numbers left. So that's your range, right? Your premium earned $1.91 to the implied volatility, $2.10. Now, if you look at this, it's doing the average. Again, it's doing the average between the 2.10 and $1.21. which is $2, which puts us at an 84% yield. And that sounds about right, right? I mean, I'd probably look at maybe the $1.91 because it's actually what's showing as the premium earned. Sorry about that. I drink some of my coffee. But I'd probably lean more towards the $1.91. Of course, we still have 4 days left, so $2, or even a little more than that, could be more accurate. And I'm sorry, I know I'm letting y'all into my brain and my thought process and how I go into this, and so believe me, the way you're probably feeling right now, this is how the people that I train at work, because when they come to me for a question. It's not going to be 5 minutes because I'm going to spend an hour to explain to you why and the behind everything and show you everything. So, but anyway, so we finally get into the D's. So we got Dizzo here. We don't have a lot of outstanding shares for this one. The previous distribution was 77 cents. Now, if we look at our current IV, it's 30-day IV, we're at 23%. So the estimate right now is only 43 cents based on that. If we look at the premium we've earned so far, we're looking at 32 cents. But if we looked at the net of all these short call trades, it would only be 5 cents. So the estimated range is 5 cents to the 43 cents because 5 cents positive, so it does do that. And then, of course, it has an average of 27 cents. And so, where's my phone? Let me get a calculator. I know it's a little too early, to say anything, but if we were looking at this, then I'd say maybe if I wanted to make an adjustment, right, and I just wanted to say, well, based off of this data, I want to make my guesstimate, and let's just say as of right now, that, I would say it's, obviously that's formatted wrong, 42 cents, let's say, we'll look at that as a comparison. I didn't realize that wasn't, since I haven't had a number there, I didn't realize that I did not have that formatted properly. Obviously, I used a format from something else, probably from the line above it because it was blue, even though I really didn't want blue. All right. So if I'm just looking, at the data there at the top, I don't know. I think that's pretty good. If I'm not just saying as of right now and just saying, I think maybe they can earn, and that's actually pretty high. If I look at this, another 10 cents over 4 days, that might be too much, right? So let's just say 40 cents. And then that's just sort of me going through it. So what you could do, you can look at this and you can do your own guesstimate and you can just write down, and we can see. And then what y'all can do, well, you can't on YouTube, take a screenshot of all your estimates, but maybe in the Discord, in the Retire on Dividends Discord, this is actually a good idea. Y'all might not think so. But in the Retire on Dividends Discord, I can create a spot within the YieldMax channel just for estimates, and then everybody can drop their estimates in there, and next week actually we can review them if you want. Of course, I would only show the ones online that people want shown. I don't, in the Discord, I don't want to go in there and show a bunch of stuff if people don't want it shown. But while I'm thinking about it, so if I go into, I don't know what I have up on my iPad, or else I would go in there on here, but also there you see people's stuff. But anyway, I can go into YieldMax and I can create a thread. So I guess this is a challenge for y'all. I'll create a thread for estimates, for April estimates. And I want y'all to look at the data that I provide. Now, you might want to wait. I would say at least wait until after tomorrow, because then we'll have two more. I'll do a video roll up after tomorrow. Then we'll have two more trading days. So I would say at least wait until maybe the weekend if you want to do it over the weekend, or wait until, if declaration date's Wednesday, then maybe post them by, I don't know, Tuesday. I think that's good, right? Sometime Tuesday. And then after they're announced, then anybody that wants me to share them, I can pull them up and I can show, some of the people and their estimates and what they guessed. And I can go back and show you mine too, but we can look at some of the people's in the Discord. So I don't know. I think that'd be a cool challenge. So I don't know if anybody's up for it or if anybody wants to do that much work, but honestly, I've done the work here for you. And all you would need to do is, what is your guess on what your estimate is based on the data I'm providing? And anyway, I think that would be cool. Okay, so I've talked too much and now I've just started another project for myself. Actually, for y'all. But I don't know. I'm a nerd. I know. I'm so sorry. I love numbers. All right. Of course, down here at the bottom, a difference in previous to average, 51 cents. I should probably do maybe a difference to my estimate to previous. I'm just typing that down in my notes. So then that way I don't have to go watch my video again later. I'll just go to my notes. So then that way you can see that at the bottom. Because again, to me, this is skewed, right? 5 cents, it's not going to be possible. So that makes this average off because it's counting for that. So then when we look down here, this data does us no good because we know they're not going to have that 5 cents in there. So I don't know. Just another thought. Again, I know I ask things of y'all, and it's just to get your opinions. You're like my sounding board, right? And for those that, want to respond, that's awesome. If you don't, that's fine too. I mean, it means you're good with what's here, right? All right, so we went through Dizzo. So then we have Phoebe. So last time it paid $1.18. And that was a 61% yield. If we go based off of the 48% IV right now, that would be 93-cent payout. If we look on the premium earned, it's only 48 cents. That's interesting. It makes me wonder what the IV was on the other weeks, because that's a significant difference here. And then if we look on the short call traded, I need to reword that. I don't like the way that is. But the all short call trades, it's only 22 cents. So then when we go to our estimated range, we're looking at 22 cents to 93 cents. So our average would be 54 cents. And that doesn't look good if you look at the previous month. Now, I haven't done the video, I think, since the last distribution where I went into the total returns and all the dividends or distributions paid and everything else. I can do an updated one of those maybe this weekend if y'all wanted me to. But I definitely would do it, once we get the next distribution or after that. So we can do a total return with the new distribution to see where we're at. But yeah, so the point is that I don't know what the previous distributions were with Phoebe, FBY. I don't know if they were up in the dollar range or not off the top of my head. And I do not have my other spreadsheet here. All right. So because I've mentioned this a couple of times now, I have pulled up my dividend tracker. And then I had to verify something because it looked weird. But Phoebe paid $1.18 the past 2 months. It was $1.17 and something cents, which rounded up to $1.18, 2 months in a row. And the month before that was 99 cents. But if we look from September to December, the distributions were 28 cents, 45 cents, 48 cents, and 60 cents. But the total average, if we took all of those and averaged them up, it would be 74 cents a month. But if we exclude the first one, because the first one may be lesser than a month, we're looking at distributions that range from 45 to $1.18. But I know Disney's been doing a lot of stuff too, so I don't know. I'm thinking the average right there is probably somewhere in the ballpark. I just don't see it going down to that 22 cents for all the trades. I'm thinking it looks better around that premium earned range for me. But that's just my opinion. So let's just move on to the next one. So we have GUI here. And let's see, previously it paid 26 cents. All right, so they paid 26 cents, which is almost their lowest distribution so far. Their lowest was 23 cents. But if we look here, the premium earned is 31 cents. And for all of their trades, so all of their short call trades, it looked like negative 69 cents. So then we go to our estimated range. It's 31 to 44 cents because that's the only two numbers left up there. So the average of 37 cents, assuming, they make some money over the next few days, that may be about right if we're looking at our premium earned. That 0.37 cents looks about right. Of course, that would be up. And honestly, they've paid out 7 distributions, and 3 of them were like 37, 39, and 39. Then they have a 42. So that's right on par with what they've been doing. And looking at the premium earned, it assume they'll earn some of the next few days. 37 cents is probably about right. We will continue to watch it over the next few days. So JPMO, previous distribution was 49 cents. All right, so 49 cents is actually pretty high for JPMO. They've paid out 6 distributions. 4 of them were 20 to 25 cents. And then they have this one the last one at 49, and then they did have one at 52 cents. So it looks like it would probably be somewhere around the 20 to 25 just based on the 4 out of those 6 months. And looking here, the implied volatility is telling us 37 cents. But when we're looking at the premium earned there, we're looking at 17 cents, and all trades, all short call trades, 7 cents. So I'm going to say it has right now the average of 20 cents. That may be about right. It may be a couple of cents more depending on the next 4 days. So let's look. Yeah, maybe 23 cents. Of course, that's just, it's so tiny. It's like, oops. Like, does it even matter 3 cents to change that? Or not to change it. But to adjust it. I just didn't want to go through having to format percentages and take out decimals. But I don't know. If based on the average, that would be 29%, 29 cents less than last month, which is more than half down. But let's move on to Murney. All right, so for Murney, the last distribution was $1.13. Our implied volatility currently is, based off of that, is 90 cents. And the premium earned so far is 87. So that's pretty close to that. And then, of course, our overall short call trades is 43 cents. And that's, I believe, if I remember correctly, when I cover 20, 21, however many it is, ETFs, sometimes they mix. But I know Moderna has been going up. And I think it might have gone above its strikes recently. Which is why we have a negative on the all short call trades. But if we look at our estimated range and we take out our negative, we're looking at 87 to 90, and then the average ends up being 89 cents. So, yeah, maybe. I mean, if we've earned in premium 87, and if they paid it based off of that, which we don't truly know. And let's see. This is where I need to go in and do some add something to here I thought about a while ago, and maybe that's what I should just do this weekend, so I'm not making this video longer, to try to put something in here. I just wanted to really show you this is what I was thinking. But what I was trying to do, okay, I'm not going to do it because I didn't do it on the other one anyway, and I want to try to be somewhat consistent on these. But yeah, I would guess more than this, more than 90 cents here. I'll just do it later and put an amount in here, and then we'll just adjust it as we go. And then I'll make some other adjustments I was thinking about. But just because we started going over the dollar amounts, this one hasn't been consistent. The first one was 41 cents. The next one was $2.65. Then it was 59, and then $1.13. So this one's all over the place. But right now we're looking for probably more than 90 cents. If we look at MSFO, all right. So this one doesn't really look good. The previous distribution was 76 cents. Based off implied volatility, it would be 40. Would look at 42 cents, and then if we look at the premium earned so far, it's only been 29 cents, and then the all trades, at least it's positive, but it's only been 6 cents. So our estimated range is 6 to 42 cents. The average is 26 cents. So just looking at this, I would guess maybe 30, 35 cents. Just pulling numbers out of the air, you know. But if I look at, what did I say? I said 30 to 35 maybe. Of course, we still have 4 days left. But average, if we looked at all 6 months, they average about 57 cents a month. But it's like they have a couple of low ones, a couple of mid ones, and a couple of little higher ones. So we have 28, 38, 78, 51, 68, 76. So it's like we were low, middle, high, low, middle, high. Looking at this is probably going to be a low one, and it would go with that pattern. Not to say that, that's how that works, but that's really what it's looking like right now. But I don't know, maybe 30 to 35 cents there for MSFO. Which would be half. That'd be cutting the distribution in half from last month, if so. If we look at Misty, so now Misty's different. Misty has not had its first distribution yet. I think this one was out for 2 weeks before the last distribution, which means this would have roughly 6 weeks under its belt to pay for, and not just 1 month. I will say that implied volatility, it is not adjusted for a month and a half. I know that. This is just the same as all the rest of them. But the implied IV on it right now is 146%. If we're looking at the premiums brought in over the past 6 weeks, it's been $4.70. But if we looked at the net of all the short call trades, it's only been $1.26. So since that is positive, the estimated range is from $1.26 to $5.45. Of course, we know they're not going to pay $1.26, and we know that the $5.45, I mean, that's still only an estimate for 1 month, and we're talking a month and a half. So to me, I know the average here, right? The average of those numbers is 381, and I mean, that's 100%. 102, but I think I don't know. If I'm looking at that premium of 470 earned, I I'm assuming that the premium earned is the most accurate until we get numbers to compare things, distributions, and try to pinpoint it more. Right now, I'm leaning more towards the premium earned. So with that said, I expect with 4 trading days left for this to be over $5. So that's just my quick thoughts looking at this. And this would be their first distribution. And then, of course, if you didn't already know, this is up to $45. Yep. So let's move on. We have Nestle here. So Nestle's previous distribution was 73 cents. All right. So 73 cents for the previous distribution. It just so happens to also be 73 cents based on the implied volatility. If we look at the premium earned, we're looking at 49 cents. If we look at the net trades, it's very similar. It's at 46 cents. So those are just within a couple of cents of each other. And, of course, our range is going to be 46 cents to 73 cents. And the average of those three would be around 56 cents. If I look at previous distributions, the average of for 7 distributions is 71 cents. Now, I mean, looking at all those 70s and me telling you the average is 71, you would think they would all be somewhere in that range, but they are not. So the first 3 payouts were 40 to 50 cents, and then the next 2 payouts were 80 cents. And then February's payout, which was the highest for most of the YieldMax funds, by the way, it was $1.26. And then, of course, this last month's was 73. But if we were looking at the average and then just based on, there's 3 out of the 7 months, that was 70 to 80 cents. You would think it would be about there. But I don't know. Looking at that 49 cents right there, let me just make sure. Yeah, maybe we're looking, I don't know, maybe 64-ish cents. I don't know. I'm going to go back and add some things, but I guess I know some of these I've just been saying off the top of my head, and I haven't written them in there, but you heard me say it. If you have the volume on, because I do joke that people probably watch me on mute because of my accent, and they probably get annoyed with it, which is funny. Not really, but the other night one of my videos had no audio after uploading it 4 times, so that was an hour wasted. But I'm sure y'all got good information just from watching the screen. But yeah, I don't know. We will see. Based on the average, it would be 17 cents less than the previous month. So we made it to NVIDIA. NVIDIA, this does not look good. And I don't have the trades in front of me, but I think, and see, this is where I hate saying I think without going and looking it up, because I really like to verify. But to save you some time, I'm not going to do that. But I think they had to pay out some large sums of money to close some things out, like a lot. All right. I actually had my video paused for about 30 minutes because this didn't make sense to me. If we paid out $2.62 previously, and what it was is that I had made the statement, and I wasn't sure if it was right that they had to pay a bunch of money to close something. And honestly, I went and looked at my trades, and I didn't really see that on my all trade sheet. I did see they had to pay to close a few of them. They did cost maybe $3 or $4 million, but not as big as I thought it was. But in the meantime, it looked like there were some gaps in days. So I went back to my trade tabs, and I found 3 days that I do not have the NVIDIA data on there. Based on the reference, because I paste values, I copy and paste values every day so I don't lose the data. based on the sale saying reference, that tells me there was probably too many lines to post. Either that or something was wrong with the website at the time, or there was too many lines to post, and I didn't insert the lines. So that is a fail on me, and that's because I had stopped reviewing the trades, every single trade, and then go to the holdings and review them again. And we were trying to consolidate them, with the new and everything else, so we could reduce the amount of time it took to do it. And y'all were just, you know, getting the same data but not duplicate really by going over the trade and then going over the holding. So when I did that, then I started just scanning all the trades just for any that were closed, and I did not do a good job of making sure the data was there for every single one. If there was data, right? And actually, I'd noticed that this last week on some, so I've been doing a better job on this last week. But I only knew of one day that I had missed, which was Tesla, and I got those from Rod, so that was no big deal for that one day. But yeah, so I found 3 days. It was the 7th, 11th, and 12th, and there may or may not have been trades. But then I'm thinking that maybe, maybe they were there when I did my video. So I'm going to go back and watch the video and see. And maybe it's just when I pasted in value, did copy and paste the values, it wasn't there. Because if you see my videos, sometimes the formulas will pull from the Google website or whatever website it's trying to pull from. And sometimes it won't at the time, that specific time. So like sometimes when I need to do a video, I might have to wait for all of my stuff to load before I can do a video. So anyway, I'm going to try to go back and get those. So at this time, I would state that this data is not accurate, just based on, the possibility there that that we may have 3 days of trades missing. So I don't know. At this point, I can't even, begin to make an estimate on this because of that. In this case, if I had to guess it, I'm going to go with implied volatility. Or look at, the historical distributions, which isn't really, looking at historical distributions, I might as well just go based off of IV. Because, this one's been out quite a bit though, 5-10 months. It's paid anywhere. Its lowest payment was 42 cents, and its highest payment was last month at 262. So that 262 up there, I mean, it throws you off because you're like, oh, that's huge. But the one right below that was $1.53, so that's $1 something difference. And then if you go to the next one below that, it was 93 cents. Like I said, it goes all the way down to 42 cents. So I don't know though. Based on the last 2 months, I would say that you would probably somewhere, at least in the dollar range. So that's why, if for some reason when I go back, if I watch my videos and I definitely do not have those trades, then my guess is going to be on implied volatility. So, yeah. So I apologize. Like I said, it just so happened because I went to look for the trade and happened to see it. And I will say, as I was scrolling in there, I did find one other AMD, and I'll look, at least for my copy and paste. I say that on that tab, it might have been missing, but it might not have been missing on the all trades for that one. Because sometimes I will copy and paste it ahead of time. On my all trades tab, I might paste it over there. And then on my actual dated tab, I may or may not copy and paste it that minute. So I'll check that one AMD, which it was just a loading issue. So I know at that point it was just still loading from the website when I copied and pasted values. So I might have that one, but I'll double check that one as well. So anyway, I just wanted to let you know where we were on that, and that I'll follow back up on it. And then this one was another one I remember seeing that number, and it's referencing a wrong sale. All right, sorry about that. There we go. I saw that one earlier. and I forgot to fix it. And then when I saw that, I remembered what it was. Is if any of you watched the weekly video, I had this one colored, that formula on the other sheet. And I was like, man, it was a different color than the other ones, and I didn't know why at the time when I did the video. But now I remember, for some reason, on the website for OARC, the table is different. It has a different number of tables than all the rest of the website. So this formula has to be different than the others. So I feel like I should add a note or something. Okay, view comments. Let me make it a different color, which is what I had before. It's just a slightly different color, just to let me know it was different. So yeah, so that's what happened there. In fact, I know y'all don't care, and y'all nerds don't care, but I actually didn't go to Jay for something for once, and because I feel bad bothering him. And by all means, if he'd give me somebody else's info, I'd bother them. But he's probably afraid that they tell me too much information because I ask so many questions. But anyway, so the way I had my formula set up, I had this data pulling from the YieldMax website. But then at some point, when they started getting the new ETFs, and nobody else is, I don't know if anybody else has ever noticed this, but when they started doing the new ones, like the last 6, so I can't remember how many months it's been that they've been doing this, but they've been putting the distributions on those pages backwards. So all the rest of them, the older ones, the latest distribution was at the top of the page. So you would have like, it would be March, then February, then January, and so forth. Well, on the new ones like PayPay, Murney, all of those, there's like 6 of them, I think. That's why they had different colors last week on the formulas. They were the opposite. They were at the bottom instead of at the top. So I used the contact us thing on the YieldMax website and kindly asked them to swap them around on those pages. I didn't get a response back. I did get some kind of email generated thing about thanks for emailing or something. But anyway, when I went to the website, they changed them. So that was awesome that they went and changed all of those for me, and it makes a difference on my formulas and being able to keep them the same. And but this OARC one's still weird because for some reason it has extra tables on this website. But anyway, that's just some additional information y'all probably didn't really care about, but I thought it was cool how quickly they did it as well. And they're probably wondering why, but this is why, so we could pull the correct data. Otherwise, I'd have to keep changing the formula every month because it would go down versus just being on the first row. But anyway, so we hadn't even got through this yet. So we started, and the previous distribution was 46 cents. And so what I didn't do, I've been doing it this whole time, is trying to go find what all the distributions were to give you an idea. So 0.46, even though I know I had this updated somewhere because I did a whole video on this, but on this spreadsheet I have, it's just not updated. But anyway, if everybody's been following OARC, I mean, its average over all of the distributions for the year is being, 51 cents. But if you took out the first 3 months of that, that would significantly drop because the first 3 months was 74, $1.09, and 77. But since then, we've only ranged, there was a 68-cent in there once. So if we take those 4 out, we're ranging from 24 cents to 55-ish cents. So just looking at these estimates, I mean, this looks about right. The last distribution was 46, IV's 38, but it says the premium we've earned is 42. All trades is 38. So we're looking 38 to 42 cents earned so far with the average of 39 cents. With a few days left, there's possibility they could get, about the same as they did last time. If I'm using the premium earned as my, my go-to right now, they might be able to earn about, that 45, 46 cents there. So anyway, we're going to move on to PayPay. I need to start looking at these outstanding shares. I just didn't notice. Some of these have really low shares, which then again, I'm saying, oh yeah, this will probably get about there. But if a bunch of people buy into it, then it's just going to make that lower. So just remember that as we're going through here. So PayPay, 72-cent distribution last time. Based off the implied volatility, we're looking at 55 cents, but we've earned 52 cents a share based on the premium that we brought in for selling the calls. But then all of our short call trades has been a net of negative 8 cents. So if we take that negative number out, we're looking at that estimated distribution range of 52 to 55 cents, which is implied volatility is 55 cents. Well, I guess because those two numbers are the same. Sorry, my brain's getting fried now. So that's 54 cents. And PayPay, if I look here, let's see, I don't have that one on here, so I'm just going to have to put that rounded number for now. The average payout, if we look at all the months, which I say all, there's 5, of PayPay, we're averaging 52 cents a month. So 72 cents was actually its largest paying month, but it's been ranging between 52 to 65 cents until this last distribution. So that's about right if we're looking at that 52 cents there. They could earn up to 60 cents maybe, just depends on how the next few days of trades will go. But we'll move on to SQY. So previous distribution was 65 cents. Let's find that on my handy dandy spreadsheet. I just said 65. So it's only had 5 months of distributions. So this one's been crazy. So we've had 33 cents, 44 cents, 65 cents. Then we jumped to $1.62 and $2.15. Now, I read those in order of, numerical order, not necessarily by the month. So, yeah, it's worst month, which a lot of bad months were in that other month. Sorry, looking at the numbers of my other spreadsheet. Okay. So based on implied volatility, 91 cents, which makes sense, right? Because this one has somewhat, just a little connected with Bitcoin too. Of course, it's other things, but it has that little bit of link, or at least it did more back in, I guess that was December when we had the 215. I know when Bitcoin was going crazy and coin itself, Coinbase, they were going crazy, Squee and Block were right there with it, but I haven't really seen it doing that this past month. I don't know, maybe y'all saw something different, but anyway, so 65 cents previous. If we looked at the average, which with 5 of them all over the place, it's really hard to tell. But if you just averaged them, it's $1.05. If we look at our applied volatility, we're looking at 91 cents. But if we're looking at premium earned, we're looking at 83. And so all of the trades though, with the net short call trades, it's 72 cents. So I don't know. We might be able to get up to $1. I guess it just depends on where the outstanding shares go and what we do in the next 4 days. Sorry, I'm going to try to get through these next ones a little quicker. Man, look at those outstanding shares though, 45 million. PayPay had only like 700,000. 45 million. And yes, I know it's been out a lot longer. But so if we go to Tesla on my spreadsheet, now just know, well, I hope it's on this one. Let me look. No, I did. It's not on this spreadsheet. I need to get my other spreadsheet on the cloud. I did it for the spreadsheet for the video I did last month with the total return. So I don't know why this one I have doesn't have the adjusted where I doubled or halved or whatever based on the reverse split on all of the numbers to make everything compare. But based on this, we did 81 cents, and honestly, I don't even know if they paid 81 cents. I'd have to go back and watch Rod's video. I mean, if they earned 81 cents, I'd have to watch Rod's videos. But, I mean, I don't know. I had some of the trades, but not all of them at that time. But regardless, that one had a reverse split. It was going to pay 81 cents or 80 cents because the previous month was 40 cents. And we go through the whole thing. Oh, it's not going to change, even though we know all the distributions go up and down. But we know, Lord forbid, if it was going to be more than 80 cents, it was going to be a fight. You know what I'm saying? Like, people would be ready to fight. Well, you said it wasn't gonna. So anyway, we know it had to be 80 cents. Now, this month, will they have to make up because they overpaid for something? I don't know. Maybe. Because again, I don't know. I don't know what they earned last month. And they may spread that over multiple months because that would make more sense. It just depends on what you earn. And we're looking here at 56 cents. That's not good. That's not a good sign. That's going to make Tesla look bad. So me, if I'm looking at this and I was doing this, of course, I don't know rules. I know nothing, right? But if I'm just looking at this number and I'm trying to decide whether I'm going to pay somebody something based on all the information that I know, again, no rules or laws or anything else, yeah, I'm going to pay more than this 56 cents. I'm going to aim for that, trying to get that 80 something cents out again. I mean, we just had the reverse split, and I know the other month we had to, and I still feel like it still needs to be up there because 56 cents, if, just using that number there, no, that's not good because the previous distribution was 40 cents, right? So that's what doubled that one for the reverse split. But the previous months before that, we were averaging 50 to 60 cents. Like, if we go back, is that December? I'm trying to go backwards. November, October, September. Okay, so if my column Q here, well, let's see. I might have the months on this sheet. I shouldn't I? Yeah. So if we go back to September, 58 cents. October, 58 cents. November, 58 cents. December, 60 cents. January, 56 cents. Your average there is 58 cents before the reverse split until you hit February, and then it was this, all-time low distribution of 40 cents. So I honestly feel that 56 cents is unacceptable. Oh, it sucks so bad. But I know also, if I take feelings out of it, that this is based on implied volatility. But in this case, I feel that this should be based on feelings and not on, I feel that, if Zega can, and I'm sure they can, that they should do this distribution based off of how their customers feel. Otherwise, people just start getting out and selling at losses and all kinds of stuff, which I know people are going to do anyway, and they can't stop that. But to try to instill confidence and stuff like that, I feel like they need to pay that 80 cents again or around that area. Because I'm just looking at this and I'm like, 56 cents? And I was getting 56 cents before the reverse split. But anyway, okay, I'm getting off my horse on this one. If I had to guess, or if I went with what I would want it to be versus what it, whatever, I think it should be 80 cents. If it was me, that's what I would pay. So we're going to move on. Sorry for that. I try not to get emotional. I try not to put my opinions in there, but that's the one. It's a total different case with reverse split and everything. And, everybody out there, yeah. But anyway, let's look at Zomo here. So Zomo previous distribution was 28 cents. All right, so just looking over here. I know I didn't do it for the first few, but so we did 28 cents. So Zomo pays out in the 6 months that it's had payouts. It's been anywhere from 20 cents to 41, but 41 was high compared to the other one, like 10 cents higher. So if we take that one out, we're looking 20 to 31 cents. Of course, we just look at the average itself with all of those trades, it's 28 cents. So if we look here, they paid 28 cents last month. Implied volatility says 29 cents. Premium earned says 29 cents. If we look at the net of our short call trades, it's negative 51 cents. And that's, honestly, it's one of the reasons that I got out of Zomo. I kept buying and buying and buying on all the dips and buying, and they just, the premium, the strikes, they were always maxing out on the strikes. The strikes were never, high enough. But now that I've watched the videos, from what I understand, I'm watching all the interviews and listening to Jay and asking questions and whatever else, that, well, they're doing those so they can earn that percentage of the IV for that week for that premium. So, but it sucks because it could never go up. It just kept getting held down because it was maxed out at its strike price. But anyway, so guess what? Our estimated range is 29 cents to 29 cents. Therefore, our average is 29 cents. And last month's distribution was 28. With 4 trading days left, I don't know. Maybe we can squeeze out a couple more cents here. But we will see. And thank goodness for you, and thank goodness for me, that was the last one. I really hope that you've got something out of this and you appreciate the time that I've spent, trying to gather as much data. And I don't like to just throw stuff out there to just quickly throw something out there. I really want to think through what I do and take the time to build stuff, and once we get this stuff built, and the more we do this and the more we adjust, the easier this is going to get, and we'll get used to formats. But right now we're in those changing and still initial building stages. So like I said, this will be the very first one that I've done as far as guesstimates, right, for entertainment purposes only, for the YieldMax single stock ETFs. So I'm going to end this here. I don't even know how long this video is, because I had to keep pausing it to do stuff, and that 30-minute NVIDIA pause took a lot. So I'm sorry this is long, but again, we're covering, I believe it's 19 ETFs in one, and it's just really easier for me to cover it all in one video versus trying to do 19 different videos and then explaining everything in each video. So I appreciate you watching. Let me know what you think. And then this weekend, I will make adjustments to this, get our final numbers from tomorrow. I will look up the few that I had that we may or may not have some missing trades on, and then I'll follow back up with that on the next video. And then if y'all suggest some changes and stuff, we'll look at that. But anyway, I'm going to go work on the other videos now, and I really hope that y'all learned something from here. If you have any please let me know in the comments. Also, I know I posted last night, and I don't even know, there might not be anybody listening to me at this point, but I did post last night. If y'all could subscribe to my page, it would be great. I don't ever ask, really. Every now and then I might ask for you to like my videos, if you liked it, like it, but it's rare, and I don't ever ask for you to subscribe. But I should have tried to do this earlier, but I think a week or so ago, Rod was talking about maybe trying to get me to 1,000 before the end of the month, and I didn't think about it till last night. I guess I should have done that before 4 days to the end of the month. But anyway, it's just a goal to maybe get there. Maybe we can get this out, get it out to more people. I know I'm just starting, but I appreciate everybody's support and this journey that I've been doing for the last 6 or so weeks. And I just say thank you. Bye.